Welcome to today's podcast. I'm Sonia, and I'm joined by Simon.
Hello, I'm Simon. We're here to discuss the latest news and developments in the world of technology and business.
Let's start with the news that OpenAI has reduced prices for its GPT 5.6, Luna, and Terra models. The company slashed prices by 80% and 20%, respectively.
That's a significant move. What was the reasoning behind this price cut, according to the reports?
OpenAI is trying to boost adoption and compete with lower-cost Chinese AI rivals. The price cuts target their smaller and mid-tier models, which are now capable of handling tasks that previously required more powerful systems.
So the smaller models are becoming more capable. How does this impact the overall AI landscape?
The move may intensify competition in the industry as U.S. companies battle cheaper Chinese rivals. Businesses are scrutinizing AI spending, and OpenAI is responding by making their technology more affordable.
That makes sense. But what about the financial implications for OpenAI? Does the reporting say anything about that?
The articles mention that while this move may increase usage, it may also strain OpenAI's finances before their technology becomes more widely adopted.
That's an interesting point. Let's move on to the next story.
Robo.ai has appointed Dr. Jassim Al-Mansouri as CEO of its subsidiary, Alif Holding. What do we know about this appointment?
According to the press release, Dr. Al-Mansouri's appointment completes Alif Holdings' core leadership and marks the formal establishment of the group's management team.
The group is building a management team led by senior UAE executives to oversee its business and corporate governance. This suggests a significant investment in leadership.
Right. And what about the context of this appointment? Is there anything in the reporting that gives us more background?
The articles indicate that this is part of Robo.ai's strategy to develop Alif Holding into an intelligent industrial technology group based in Abu Dhabi.
So this is a strategic move to expand their presence in the UAE.
Exactly. Now let's discuss another major development. Sainsbury's has announced a significant change regarding Argos in the UK. The retail giant is selling Argos to Swift Partners for $161 million.
That's a major deal. What are the implications for Argos stores and employees?
The sale affects 466 Argos stores inside Sainsbury's and 201 standalone stores. The reporting suggests that hundreds of jobs are at risk due to this deal.
That's concerning. How does this sale compare to Sainsbury's original investment in Argos?
Sainsbury's acquired Argos for £1.4 billion about a decade ago. Selling it for £120 million marks a significant loss.
That's a steep reversal. Were there any other potential buyers considered?
The articles mention that talks with JD.com collapsed less than a year ago, and this deal with Swift Partners is the outcome.
I see. It looks like Sainsbury's is restructuring its business.
Let's move on to Zepto's recent decision to defer its IPO listing. CEO Audit Palicha informed employees that they plan to refile IPO papers after 2 quarters.
What was the reasoning behind this deferral?
Zepto is looking to raise about 1,000 crore rupees in pre-IPO funding. The company is delaying its listing plans to improve financial metrics before entering the public market.
So they're taking a step back to strengthen their financial position. What was the initial valuation target for the IPO?
The reporting mentions that the IPO pricing received from large institutional investors was in the $2.5 to $3 billion range, which is lower than the $3.5 to $4 billion valuation discussed earlier.
That's a significant reduction. How does this compare to their previous valuation?
Zepto's last private funding round valued the company at $7 billion in October last year. This indicates a substantial decrease in valuation.
That's quite a drop. It seems like the market conditions are challenging for tech IPOs right now.
Let's discuss the launch of the Favara UPI cross-border payment corridor between the Maldives and India. This enables real-time digital transfers between the two countries.
That's a significant development for cross-border payments. How does this integration work?
The Maldives instant payment system, Favara, has been integrated with India's Unified Payments Interface. This allows for seamless and real-time fund transfers.
That's great for economic ties between the two countries. What are the potential benefits of this integration?
The reporting highlights that this will enhance cross-border economic ties and facilitate easier transactions between the Maldives and India.
That's a positive step. It simplifies the process for individuals and businesses to transfer funds.
As we wrap up today's discussion, it's clear that there are significant developments across various sectors, from AI pricing to cross-border payments.
Indeed. Each of these stories highlights the dynamic nature of the tech and business landscape.
And as we sign off, we look forward to bringing you more updates on these and other stories in the future.
Thank you for tuning in. Until next time.
Goodbye, and thank you for listening.